big government and the regulatory environment still an issue for small and middle market businesses struggling to get financing from traditional banks. That's where one company steps in with a simple and cost-effective solution. Saratoga Investments, helping private companies raise capital by investing in their leveraged loans and mezzanine debt. Joining us right now is Saratoga Investment CEO Chris Oberbeck. Good to see you, Chris. Thanks so much for joining us.
Oh, thank you.
Characterize the environment right now for this kind of lending.
Well, basically, we're looking to finance companies that earn between $3 and $25 million of EBITDA. And we see a lot of demand, a lot of very interesting companies. I think the companies that we finance aren't necessarily attached to the broader economy because they've got their own niches. And so sometimes the economy can be going down or be slow, and they still have a lot of opportunity.
So the loan demand is there, you think?
Well, the loan demand is there on the growth side. However, the number of acquisitions, we finance a lot of acquisitions, are down substantially year over year.
Why?
That's a good question. Aggregate loan demand is down, and there's a lot of providers of capital, and there's fewer borrowers actually right now. So there's a lot of competition.
It's a good indicator.
So it's a good time to get a loan, or is it a good
excellent time to get a loan?
Okay.
Yes.
Okay. So what do you think about interest rates going forward? Is that going to impact the business in some way?
Well, I think there's a lot of talk about interest rates going up. In our particular business at Saratoga, we're very well prepared for that. All of our liabilities are fixed rate liabilities, and our assets are floating rate. Our industry, the BDC industry, largely, like for us, 2/3 of our loans are floating rate. So a rising rate environment is not a problem for us, and I think the real issue is why are the rates rising? It's rising because it's a strong economy.
But
that's
the
good.
Rising rates will slow down the loan demand, though, then, right? You think, or that won't happen?
Well, it depends why it's rising. I mean, if it's rising because of all sorts of macro effects, China buying less government debt and that type of thing, I think that would be a problem. But if it's rising because the economy is getting stronger, I don't think it's a problem.
You see, I think that's a really good point, because real interest rate rises are very healthy for the economy, very healthy for the stock market. Nominal interest rate rises are not so good for any of us.
But the regulatory environment has sort of opened a door to your business, right? Because
yes.
A lot of the traditional banks are not doing the kind of lending, which opens an opportunity for you.
Yes, I mean, ever since Dodd-Frank was passed, and I think the regulatory climate in Washington is really trying to strap the banks down really tight and keep them from making loans. And so it's very difficult to get loans, especially for smaller businesses. Banks are looking for lots of hard collateral, covenants, lots of amortization, short-term, very rigid structures. And we're all able to offer very flexible structures that allow companies to accomplish their goals without having, mandated regulatory restrictions.
I'm trying to think of the right question to ask you that would speak more broadly, but what are you seeing as far as the most interesting way to invest in companies like right now? Like, what trends are you seeing?
Well, actually, we like our business. We like our industry, the BDCs. I mean,
and that's business development companies.
Business development companies, correct. We're lending, over almost 2/3 of our book are first lien loans, and our average portfolio yield is around 11%. So, we're getting some very good rates lending to growing companies, and we think that's a very good place to invest.
That sector, those growth companies that you're talking about, is there any specific group that you're finding more opportunity other than over others, or is just very much across the board differences in terms of the kinds of companies you're talking about?
Well, again, in the small companies, there's lots of niches. There's companies you never even heard of. We're investing in a passport expediting company, for example, or companies that provide advertising for hotels and things like that. So the creativity and the type of businesses, are all over, and so we're seeing a lot of vibrancy there.
Chris, good to have you on the show.
Thank you.
Thank you so much for joining us, Chris Oberbeck there, Saratoga.